President-elect Trump is already having a big impact on the nation's housing market. Interest rates have gone up and mortgage rates have followed. So what else might a Trump administration have in store? Diana Olick has some possible answers.
The price tag for a home just got a little higher today as the continued sell-off in the bond market pushed the 30-year fixed mortgage rate across the 4% line. That's the highest in almost a year and up dramatically from just a week ago. Words like panic and damage control were floating around lenderland as borrowers tried to lock at lower rates. While the immediate Trump effect was negative for borrowers, if the president-elect keeps his word on deregulating the financial system, getting a mortgage could get easier. Lending has been tight due to endless lawsuits that continue even years after the housing crash.
So just getting them to holster their weapons and say, look, we're going to put a moratorium and we're going to stall on any of these existing Department of Justice investigations or suits until further notice.
If the banks see less risk, they may open the gates wider to borrowers. But new regulations on lending from the CFPB are unlikely to change soon. Dave Stevens, CEO of the Mortgage Bankers Association, said barring a change at the CFPB, it's hard to imagine we'll see much change in the near term. Then there are mortgage giants Fannie Mae and Freddie Mac, which are still under government conservatorship. Their stock actually moved higher last week, with some investors thinking they'll be recapitalized and released. But Donald Trump said nothing about the two during the campaign. Now we have a Republican-controlled Congress, and the mortgage giants generate billions of dollars that go straight to the Treasury. That money could be well spent on the infrastructure projects Donald Trump has promised.
The GSEs, Fannie Mae and Freddie Mac, are throwing off roughly around $15 billion a year in cash to the Treasury. That pays a lot of bills.
Housing is likely low on the president-elect's to-do list. The recovery is still bumpy, but not broken. So why jump in to try to fix it? For Nightly Business Report, I'm Diana Olick in Washington.